This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So a trading loss may be relieved against total income after the qualifying loan interest payments of the tax year for the loss and or the preceding year. So it's either a current year and or a previous year. You have the choice as to which one you want to put the loss against. So the loss in the accounting period is then assessed to the tax year basis, and the loss for the year to the 31st of March, assessable in 23-24 on a tax year basis, which is the year what we're working on now, may be relieved against the current year and or the previous year. And again, it's and or. You have the choice. So if relief against total income is taken, then the loss must be set off to the maximum possible extent, subject to the cap, which we'll have a look at later. Which means, so what they're saying is you must put all the loss in the current year and all the previous year. So you're getting full relief. However, as with the revenue, there is a downside to this. That means you could lose your personal allowances because partial claims are not allowed. They're called all or nothing claims. All or nothing claims. Now, a claim against total income may be made for either the tax year of the loss or the previous year or both, and they are treated separately, and you must put a claim on your tax return for each of the year. Now, it is very important that you are very specific when you do these in the in questions. What is the rule? Okay, what is the rule? What have I done? And show the examiner, the marker, clearly what it is that you have done. Then apply, not only do the numbers, as you saw in Albert's situation, but also dates. Remember, you must put in the dates. Don't just say, well, I'm going to carry it forward and relieve it here and here. I'm going to carry it forward and relieve it in this tax year, the balance of which I will carry forward to this tax year, and so on and so forth. It is very, very important to get full marks that you do that. So let's have a look at example number 2. So Charles has the following trade profits and losses. So for the year to March 22, he made a profit. 23, he made a profit. 24, he made a loss. Now he also has some other income, which we need to put into his income tax computation. So he's made a loss, and we now need to work out his income tax situation. So the requirements say, and always read them very carefully, calculate Charles's taxable income for each relevant tax year. That is a hint. Make sure you tell the examiner which one you're dealing with. Assuming, and again, this is another hint, that the trading loss is used in the most beneficial way, and that trading losses will continue. That is also a hint. That's basically saying there's no point carrying it forward because we're going to make losses in the future. So that's telling you I'm going to have to do several years. It's got to be beneficial for the client, so he doesn't want to pay tax, or he wants his cash flow because he wants his money back from last year, something along those lines. And don't carry it forward. Read the question carefully. And we are assuming that the personal allowance applies in all of those years. So let's have a look. Let's get a clean sheet of paper. We do like a clean sheet of paper. Okay, so we're going to do Charles. Again, we need to set up what's happening, and we need to put the years across the top. So 20, 20, 21. Nope, sorry, We read that question wrong. Let's start again. 20, 21, 22, 20, 22, 23, 20, 20, whoops, 23, 24. Years across the top. Pro forma down the side. Trading profits. Property income. Total income. See, I'm laying the pro forma out first. And then we're going to have loss relief. You leave a couple of lines, and then we're going to have net income. And then we are going to deduct the personal allowance, which will give us our taxable income. I have mentioned before how important it is sometimes to lay out the pro forma rather than just deal with it as you're going down, and then you might forget the labels. It's something you need to practice, and the more familiar you become with the questions and the answers, the more that this will come more naturally to you. Because there are marks, as in with all of these things, for copying across from the question. So the profits were 32,000, 25,000, and remember that must say nil. Whoops. And we have £6,000 worth of property income in each year. So let's add that up. That comes to 38, that comes to 31, and that comes to 6. Okay, so now we've copied that in. We now need to set up the loss memorandum. Cross-reference that. Okay, so the loss memorandum is for the year ended 31st of March 24. Let's just check how much the loss was. 84,000. 84,000. Okay. Now, the way that we deal with this, we're not going to carry it forward because the question clearly said that that would be the case. We could do a current year claim. This is the current year. We could do a current year claim, but the question said that we needed to do it most beneficial way. And it wouldn't be beneficial to put £6,000 worth of losses in there because that loss is clearly covered by the personal allowance. You remember the rule said it's an all or nothing claim. So if we put 6,000 in there, it's really a waste of that 6,000 because it's covered by allowances. So sometimes it's not as obvious, and you do need to think, as with all of these, set the pro forma up, as I did there, copy the bits across that you can do and add them up. You'll have got 2 marks for that point. Set up your loss memorandum with the accounts. Then I always tell my students, okay, stop, breathe, think. What options do I have? What's the best one for the client? Read the question again. What did the question state the client wanted to do? Okay, so the rules here, this, we're not going to do a current year claim. Okay, and I would write in here, current year claim, not applicable. Examiner can clearly see why you've done that, and that you've covered it by those allowances. Okay, so we had a choice, current year and or the previous year. Previous year claim. That's the rule. We're going to the 31st of March 23. And we're going to do a full relief there, bringing that down to nil. Now those allowances are then wasted. We have no option. If we want to carry that back, which is our only option in this situation, then that 31,000 is an all or nothing claim, which means that our personal allowances are wasted. So we're going to put that in there, which leaves us with a balance of 53,000. Now we can only go back 1 year in this situation because this client has obviously been in business for some years, so it's not an opening year's claim. We can't claim anything there. We would put in there the personal allowance. So that year, we just finish it off. They've given you those 2 years just in case you didn't know the rules properly or you confused them with the opening year's rules. So it is important that you finish that one off. Now these have to be carried forward. Future trade. So example number 2. Now there is a cap for this, and the cap applies. It's a bit of anti-avoidance legislation to stop people from making massive losses and then carrying them back and getting their tax back in one go. So let's see how that works.